Hey guys, Beat Twice here. Today is Tuesday, almost said Monday. It's Tuesday, July 6th. Um, Interesting day in the market to say the least. A couple big wins for me and a couple losses that I took and a couple that are teetering on the edge of despair. Um, so let's go over a few of these. So before we go into SPY and QQQ wave theory, I want to touch on Amazon. Amazon a few weeks ago, I was screaming that this was a buy and that it was going up to this 3,800 range. Um, Before I saw this being a wave four, and then after we saw the rally that we did today, I actually went back and recounted it. Now my price target still stands. A lot of times you go to the bigger scale, you go to like the daily, or you go to the 4 hour, something like that, to get your actual price targets of your higher degree waves. And then sometimes you try to just make sense of these small, minute waves by counting them, just so you can find dip buy spots. Ultimately, before, when I posted a video 2 weeks ago, I called this bottom. And then I said buy this dip here. Ultimately, it ended up holding. It was bottom. Now that I went back and recounted it, I'm seeing it as a wave two, and that today was a wave three. Because a lot of times when you see these moves like we saw today, it ends up being a wave three, and that's what made me go back and really look at it, because I just really wanted to go back and see, hey, what is exactly going on here? So with all that being said, even though it looks like some of these minute waves were a little bit off, ultimately this was the dip to buy. The way that we found the dip buy point here was we really zoomed in on this hourly, and we watched this first drop down for an A. I don't have it labeled, but it's an A, it's a B, it's a C. If you go down to like the 30-minute scale or the 15-minute scale, you can see clearly that there's an impulse down, three waves up, and impulse down. So what we did was we extended off of there to find where the dip buy spot was. And that's why we knew somewhere in this range it was going to be the best spot to go long Amazon, because it should catch support there and rally upward. Also, there's been a lot of stuff holding Amazon down, and it's just been really overdue for this rally. So I've been trying to catch it for quite a while now. I do still think that all dips on Amazon are a buy. I'm still in. I still see us hitting. It's going to be rocky. There's going to be some dips, obviously, now that we're going to get into these three, fours, and fives. But ultimately, what we're going to see is I think we're going to hit 3,800. I think we're going to pull back a bit. I think we're going to go above 3,800. Then we're going to have a relatively decent sized drop. This is going to be the best dip to buy. So we'll keep watching this name, because once we get this dip here, I see us launching into the 4,200 range or so. So we'll keep watching this. But anybody who did get in it with Amazon with me 2 Fridays ago, congrats, because we got a big win there. All right, so let's move on to AMD, another one that I really like right now. So AMD, I've been posting a lot of videos about. Um, every dip is a buy here, especially with shares. Even we should see another dip tomorrow, which is going to be great for options. So basically, what I'm seeing is that we're in the sequence of a five-wave move up to the $100 price target. I see us about to pull back. I think today we peaked for our white wave three. Today in pre-market, we actually touched 95.69. You can see this small green candle going up and touching it. That was our 161.8% extension. As you can see, I extended off of there. So clearly in pre-market today, we hit our wave through price target. Unfortunately, I couldn't take any profits because it happened in pre-market. I'm holding mainly options. And so it dipped down. So what we saw is we did catch some support, and we're kind of just hovering around here in this 94 range. I do think we're going to head a little bit lower. Now, I do think all dips from here are buy. I even thought the dip this morning was a buy. Because there is a chance that we won't go any lower, but I do still think we're going to get down to probably 92.50, maybe a little lower, but I really like 92.50 for the range, like right basically where this resistance or the support is here. I really like that area to be bottom, and then from there we're going to launch up to 100, and we're going to see this happen from here to 100 in probably like a week from where we bottom. It's going to be quick, at least I think it will be. So ultimately, I'm going to be watching for this 92.50 range. From that range, I will definitely be looking to get more options for the $100 price target somewhere before earnings. And then from there, we're going to see a relatively big size drop, and there's going to be another great dip buy spot for this wave two. So there's a lot of opportunity AMD right now to try to catch this drop tomorrow, hopefully, ride it up, and then hopefully get out and then catch the next drop and ride it up again. One thing I do want to talk about is unless I'm hedging, which right now I am hedged because where we stand with the market, and how it could continue dropping. I mean, kind of no one really knows for sure, right? Outside of hedging, I do not short on these drops because they can be super shallow. And then, like, we could have already bottomed for four. So there's really no reason to short this unless I'm hedging my long positions, because what if it doesn't drop any further? I just lose my money that I tried to short. Also, if I go up to get to this wave one top at 100, there's a chance it's going to rally right past that. it may only dip down to like 96 or something from the 100, maybe even 98. Who knows? I mean, wave twos, there's no rule for how shallow or how deep wave two just cannot pass the entire 100% retracement of wave one. So if wave one started at 72, the only thing that defines wave two here is that it can't go past 72, right? So like if you knew it was going to go all the way down to 72, you'd short it. But like it could only go to 98. So why are you going to short something to go from 99 to 98? It doesn't make sense. So with tech, a lot of times you look for your tops, you take profits, and then what you do is you watch for your initial wave down to figure out your price, and then you pop back up, and then you figure out your price target for C. If you're absolutely hell bent on going short, you short wave C down. You don't short wave A. You always short wave C. And then, or what you do is you just don't short at all. You save your money, and then you wait for the pop up. You get your wave C price target, and you just go long the stock because that's always better business than shorting, anyways. Okay, so now that I've ranted, let's move on. All right, let's check out Etsy. Etsy's a more recent big one that I had too, where we rallied out of this triangle, got some huge momentum going up. I called the wave three price target that we'd fall back for four. We did exactly that. We popped it for five. We hit the wave five price target, and now we're pulling back for wave two. Cool. So what do I think is going to happen? So technically, wave two could go all the way back down to 174. It could go all the way back down to 154, just like I just talked about. But I don't see that happening. I see this actually being a shallow wave two, and this is why I was saying you wouldn't want to short it unless you're hedging, because I got my extension from the initial drop saying, hey, I think it's going to be somewhere between 192 and 187. From there, I think we're going to catch support, and we're going to be heading up to somewhere. That's going to be a red wave three, and it's going to take us up to 260. Now, mind you, I do think earnings is going to play a part here. I don't think it's going to get to 260 before earnings. I think maybe 220, 230, and then if earnings is good, it's going to launch. But either way, I do see this as being a red wave three. Today, if I zoom in on this so you can see it a little bit better, we already did touch the dip buy zone that I talked about this weekend. You can see this red candle came down. It pretty much touched that 100% extension. If I would have drawn it off the top of this red candle here properly, obviously you see I did it pretty quickly, it would have touched that. So it's already touched my dip buy zone, and I actually got back into it here. It still could go lower. We still could go all the way down to this 187 mark, but I do like Etsy as every dip being a buy from here over the next couple days or so. All right, let's take a look at SPY now. Okay. So finally, after weeks and weeks of me trying to find this frickin' three-wave move down for us to get a buy point on SPY, it looks like we're going to get it. We got that decimation drop today. We pop back up for a B, and now I think we're going to head down for C. Don't be surprised if we get another flush tomorrow. I wouldn't even be surprised if we don't flush tomorrow, and it just ended up being another little shallow drop that got bought right back up like everything else we've seen for the last frickin' 2 months, it seems like. But with that being said, I do think we're going to head down one more time for a flush. It's going to take us somewhere between 428 and 425. I won't be going long SPY if it doesn't at least get to 428.5. If it gets to 428.5 and I see a clear five-wave move down, I will be going long SPY, and I would be looking for a price target of 440 in the next maybe month or so, as tech, I believe, is just going to continue to rally and rally. So even if we get lucky, maybe it goes all the way down to 425. Either way, we want to see the five-wave move. When we can see a clear five waves, that's when we get in. If we can only see three and we're at the 428 mark, we want to wait until we see five, and that will put us at the 425 if it's only three at 428. So either way, any more dip on SPY does appear to be a buy, but we want to make sure that we see a clear five-wave move down, even if it's at the 30-minute scale or so. All right, so let's look at QQQ. All right, so QQQ. So just to go over this a little bit better, I cleaned up a lot of the minute counts I had because it just dirties the water and makes it really hard to see what's happening. So basically, I wanted to go over how I got my price target of like the 380 range for this wave three. So basically, I go up for my five-wave move to get to my next higher level wave one. We pulled back for our two. Look at that, super shallow, which is why you don't short it. Super shallow wave two. So then we do an extension off of that to find our wave three price target. Bang, that puts my wave three at the 380 range. Might be end up being a little bit shallow from that. So that's why I'm kind of thinking 380. So now we're looking for another red five-wave move up to get there. So I got a 1, 2, and now I'm in the minute scale of a 1, 2, 3. So we could have already peaked for 3 and came down for 4, and we could already be going up right now for this blue 5, which is going to be this red 3. This could be already happening. Or because I think SPY's flushing again, more than likely the Nasdaq flushes again. So that's why I think here that, hey, the Nasdaq's going to flush a little bit too. It may not even, it may go a little bit lower than what it did today. I'm not sure. We'll see what happens. But just like SPY, I think dips in Nasdaq are a buy. I would buy any dip on QQQ right now. I think short term we're going up to, at the very least, we're going to see mid 360s before a little bit of a pullback. So you could definitely get some a couple percent gain here. And then ultimately, when we do get this flush down for this red wave forward, it puts us back at the 360 point. That's going to be a huge dip by spot, because then we're going to see another of these like blue Roman numeral waves. We're going to see 5 more of those taking us up to this 380 price target. So ultimately, a lot of upside here coming in QQQ. So definitely buy these dips. All right, let's take a look at Disney, one of my not so fine hours right now. I keep screaming about how Disney is going to be the greatest stock ever, because look at these wave counts and what it's going to do. It's holding this downtrend line off this bull flag for dear life. You know, it broke out of the bull flag. It came up. It had a 3-wave move down to back test that bull flag. It held it. It popped back up. I'm like, oh, here we go. It's about to be this face-ripping rally, only to fall off the freaking cliff again today to go back and back test. If it holds this, which it appears it is, then, you know, we could ultimately rally up and still hit my price target of 195. I'm still seeing this before earnings if it's going to happen at all. If we fall back into this bull flag, that's a huge red flag. I don't like what I saw today. It kind of is bringing back bad memories of Coinbase. And it's making me think that this whole move right here could have been A, we could have popped up for a B, and now we could be in a move down for a C. That C could be valid anywhere above 167. With that being said, my position will be blown out. So I've drawn this trend line, this red dotted trend line. So this is the area I'm looking at, 171, 171.37. I'm going to be creating an alert at that level. If I break that, I'm out. And the reason I'm out is I'm not waiting to go all the way down to 166. I'm not going to lose that. I'd rather cut my losses here and find the next play. I do like Disney. I do think that this is a really good setup right now, and I'm really hoping we hold this trend line. But you know, it's not looking good for me right now. All right, let's look at Tesla. So Tesla's another one that recently I had a big win popping out of this triangle. We ran up to this downtrend line just like I thought it would, and then it was just like bears versus bulls. Is it going to keep getting rejected? Which it is. Bang! It's consolidating, consolidating, consolidating. It keeps getting rejected at this downtrend line. It's not a good look. With that being said, I thought Wave 4 bottom was here the same time I called out Amazon's Wave 4 bottom. I was wrong. It looks like we're just kind of going, going, going. It looks like now that we actually had our Wave 3 peak up here, and that we're coming down now to find our wave 4 bottom. Um, I put an extension or retracement on here for the 50% because wave 4s generally you don't want to go past the 50%. They technically can, as long as they don't surpass the white wave 1 in a true wave 3, which right now I'm calling this a wave 3. So with that being said, we really want to make sure that we're not crossing into this territory. So 645 is a level to watch. It looks like we're holding the 657 really well. 645, if we break that, it's not looking good. If we go beneath 640, I am out. 640 is going to be my area where I'm saying, hey, you know what? If we break this, I'm done. I'm out, because we could be going all the way down to the bear bottom, which, if you guys remember correctly, the bear bottom is 425, right? So if this ends up going up and being if this was a wave 1 and we're popping up for a 2, the bear's like, hey, that's a 2. We could be coming all the way down here to 425. So Tesla is one that I'm in. I am long Tesla, and I'm also I'm hedged against it with puts, because I'm not 100% convinced that this isn't going to hold. I still do like Tesla popping up from here to 720, and then ultimately pulling back to the trend line, and then launching up into all-time highs, or at least the mid 800s, if not a little bit higher than that. So with that being said, I am still long Tesla, but I want to make sure I stay hedged, because this is still a very real possibility if the market continues to go south, or if Tesla has bad earnings here in a couple weeks. So all right, guys, if you like these videos, go ahead and hit a like and subscribe. If you want to see any specific stock, go ahead and hit a comment. I'll try to get to it when I can. But there's a lot of different things to look at. So, all right, guys.